If you want to make money in the stock market, it's important to not make stupid, easily avoidable mistakes that will be detrimental to your long-term profitability. In this video, I'm going to share 5 common mistakes people normally make when investing into stocks, as well as solutions and strategies for them. Wagwarn people, welcome back. For those of you who don't already know, my name is Benje. I'm a business owner and a third-year university student. Here I aim to help you make more bread by sharing my own struggles, experiences and advice. Boom. So everyone makes mistakes, it's completely natural. But continually making mistakes when investing into stocks will seriously hinder the amount of money you can make in the long term. The first mistake might surprise you, but it's one of the most common things I see occurring. People aren't even investing at all. Okay, so I know you might be tentative about investing, or you're not sure if it's the right thing for you and you think it's safe to keep your money in the bank. But this actually isn't the case. Your money is losing its value over time that it's sat in the bank due to deflation. I've done a full video that talks about this, mentions this, and shows you the shocking difference between keeping your money in the bank and investing it. You should really check that out if you haven't done already. And why you should always have some cash in your bank in the form of an emergency fund. Having large amounts of it or even all of it there is one of the biggest mistakes you can make. Large amounts of cash in the bank provides the illusion of safety. But in reality, unless you're getting interest rates that are higher than the rate of inflation, which you're not going to, it's not going to happen, you're losing your purchasing power. Investing comes with ups and downs, but in the long run it has been proven to be a good hedge against inflation. Market emotions are a key thing when investing into stock markets, and it's so important to not let your emotions take control. Instead, you need to hold your investments through bear markets because you've done good research, the circumstances haven't changed, you have a clear strategy for your investment, and know that just having your money in the bank is not a viable option because it will just keep eating away at your savings. Stop waiting for the right time to invest. As I've said before, the best time to invest was in the past, the second best time is right now. And as Nick Murray once said, time in the market is a fool's game, whereas time in the market is your greatest natural advantage. Too many people are stuck getting ready to get ready. If you ain't started investing yet, rewind that and listen to it again. I am sure that is you. The next mistake is panic selling, and I'm fairly sure absolutely everyone watching this video will have done it at some point if you have invested in your life. When your emotions are too deeply involved in your investments, as soon as you see a stock price start to fall, your head and your heart will tell you, yo, I need to sell to avoid making these losses any bigger. An easy way to avoid this is to always do your research into any potential stocks that you're thinking of purchasing. I've done videos on how you can do this, but I personally look at their fundamentals, the numbers, any past performance history, and also any future upcoming catalysts for the company. You should then use this research to form a strategy for your investment and set a target price. This will remove any urges to panic sell. Whenever you're considering panic selling, you always want to ask yourself, have the fundamentals of the company changed? Has any detrimental news come out about the company? Have any of the circumstances or anything to do with the company changed since you did your research? If it hasn't, and you're only wanting to sell because it's in the red, you should remain confident in your investment and your strategy, and instead see these dips as opportunities to buy the stocks while they're on sale. As I mentioned in my investment strategy video, I love to continue to dollar cost average into my stock positions when they're in the red, as I can lower my cost basis. Mistake number 3 is letting your judgment be clouded by FOMO, the fear of missing out. FOMO is completely natural and something that absolutely everyone goes through in everyday life, but it's key to not let it affect your judgments when it comes to purchasing stocks just because you've seen others make mad profits from it. At some point we'll have all wished that we bought a certain stock at a certain time and made X amount of money, but thinking like this will just be setting you up for failure. Most of the time, if you're hearing and seeing the hype everywhere, the majority of gains on that stock have already been made and it's too late. I'm sure we all wish that we bought Tesla in the 2019s or early 2020s when the price was under $100, sometimes even in the 40s, and we will currently be sitting on nice returns of over 1000%. However, if you want to receive the same 1000% return investment from Tesla's current stock price, you'd need the stock price to run up to almost $6,000. Although I think Tesla has a very big future ahead of them and I am personally investing in them, I don't think they're hitting that stock price anytime soon, especially not in the frame of time that they've hit that 1000% return investment recently. There will always be that next big stock and next big opportunity to make some mad bread. So if something's run in the past, sometimes it's just better to look for the next best investment. The scenario is exactly the same for many other stocks, especially those that have seen a quick run up in a short space of time. When the hype is already there, it's often too late to make the quick buck that you're after. You've got to weigh up the risk versus reward. Stock investing mistake number 4 is only looking at a history of price action. Now, while looking at price action is a key part of any due diligence process in my opinion, and I love me some technical analysis, it should not by any means be the only part of your research process. Especially with hype stocks, people often just look at the historical price action and future forecasts for the price of the stock, when in reality, you need to be combining this with other forms of research. When investing in stocks, this is very easy to do as you're able to look into companies' fundamentals, their numbers, their future plans and strategies, all just by looking at their website and on Google. You're then able to pair this with the price action to determine what kind of position a company is in and whether they have enough upside potential to make it a worthwhile investment. All of this information will allow you to put your strategies and price targets in place. Mistake number 5 is not thinking about taxes. It is probably the most important thing when it comes to investing, but too many people neglect them and don't even realize that they need to be paid. There is no one-way system with taxes as everyone's situation is different, but it is so important to know what taxes you may have to pay as a result of your stock investments. We're hella lucky that with stocks we can take advantage of ISAs, which means we're able to legally avoid paying taxes on capital gains and dividends. There's also things called Roth IRAs over in America which are similar. I have done a full video on how to legally avoid paying taxes on your stock investments, so be sure to check that one out if you haven't already. It's a game changer. With standard stock investment accounts, you will be subject to taxes on actual realized gains and dividends over the tax-free allowances set by the government. At the time of recording this video, this sits at 2 bags for dividends and 12.3 bags for capital gains. You have to be very careful with your capital gains tax allowance, however, as it takes into account any other investments or income from capital gains like crypto or property sales that are not your home. So that is it. 5 of the most common mistakes people make when investing into stocks. If after watching this video you want to learn how to start investing, be sure to check out this video. Love to everyone who's watched this far, and we will see you again soon.